All right, welcome back everyone to Wook Capital Management's 53rd. So it's been a little over a year now of us hosting these weekly Wook and Review broadcasts at the close on Fridays. Managing Director Rod Alsman. I have with me Joe Fonicello, and we're going to walk through our little newsletter write-up that Joe's sent out into your inboxes this morning. Talk about whatever topics people want to touch on after we get done with that, which should be pretty quick. Before we get underway, Joe, if you want to just read our little disclaimer to hopefully mitigate some of the frivolous lawsuits.
Go ahead with the disclaimer here. Wook Capital Management, Inc. and its employees solely provide investment advisory services to family clients and do not provide investment advisory services to the general public. Furthermore, investments are highly speculative in nature and involve substantial risk of loss. We encourage investors to obtain advice from a professional investment advisor and to make independent investigations before acting on information that we publish. We cannot assure you that the information is accurate or complete. We do not in any way warrant or guarantee the success of any action you take in reliance on our statements or recommendations. Past performance is not necessarily indicative of future results. All investment decisions of an individual remain the specific responsibility of that individual. So pinned in the nest, I have the Twitter version of the Wook in Review. So if you don't receive the newsletter, you can either sign up at newsletter.wook.gg or view the thread that's pinned in the nest. I try to tweet these out. This week I tried a little bit of a different format, tried tweeting out each story as its own tweet, so you don't have to scroll through a lengthy thread as lengthy of a thread. It's still a thread, but it's much shorter. So check that out. Hopefully everyone appreciates it. I'm able to add a little bit more depth doing it this way. So hope everyone likes it.
All right, cool. So again, just from how this works, we're obviously hosting the discussion live right now using Twitter's Spaces functionality. If you would like to, I am sharing my screen in Discord stages. And if you want to follow along, with visuals as well, you're welcome to. You can hear, I guess, the audio from me in Discord too, but yeah, you can't, do two-way communication that way. So you could text, though, if you want to submit any comments or questions by text, you can do it there. Or if I see it here, I'll do my best to get to it. So let's run through this quickly. See what people want to talk about this week. Again, Columbus Day on Monday. So hopefully for some people, they're going to enjoy a holiday weekend. So
Element says, look at Rod, all dapper.
All dapper. Wearing a Quicksilver
Yeah,
t-shirt.
you're looking pretty good, Rod. Red t-shirt. You got the standing desk today, huh?
I am so lazy. I had put the desk up a week or so ago, and I've just simply not put it down. So I've just when I'm at my desk, I'm just standing hours.
It's almost ironic. You're too lazy to sit. I like it.
I have here. You can see it. I have one of those nice little fatigue mats. So
I love it.
not only am I wearing my
great.
Birkenstocks, but I'm wearing those while standing on my little fatigue mat. So
I just bought a mechanical keyboard for the first time, and it's I'm having fun just clicking the thing. Click, click, clack, clack all night.
You should get yourself a typewriter, Joe, to really embrace.
Oh yeah, he clicks. I like it. I'm
Wow.
a fan. I tried a few different keyboards. Amazon's got the return policy that you really couldn't ask for anything better. So I just tried a few keyboards. This was the favorite. The rest are going to get returned. I'm happy with it.
Just shredding Amazon's profit. It's.
I think of it more of a try it before you buy it, and then buying it's just not returning it.
Yeah, no, I mean that just destroys profits, makes business. Yeah, it's true though. E-commerce consumers do that a lot more. They buy more than what they need. They buy. The return rates are just materially higher in e-commerce, which negatively impacts margins. Yeah, obviously the news of the, I guess, past few months has been a lot of retailers blaming increased shrinkage. So you get this back and forth between what's more structurally challenged, making profits in e-commerce retail or physical retail. But how the market's reacted, neither one is a very promising place to be. But Anyways, so you put in here in the headline the Powerball, AI versus the market, and healthcare strike. I'll try to go pretty quickly through these topics, and if people want to talk about them, feel free to request to speak. And if they want to talk about other stuff, then we can go there. So I'll just kind of run through them each. If you want to chime in on any of them, Joe, go ahead, or if anybody else does. So I saw you included rates at the top. Uh, yeah, this incredible move in 10-year yields over the last couple months, obviously with a really wide spread in the 30-year fixed rate mortgage above those yields. And we're back at, not back at, but we're near still, again, multi-decade low affordability levels with fixed rate mortgages, around 7.5% this week. So that's not new news, but if we are to believe in higher for longer, don't expect to be able to get a 5% fixed rate mortgage anytime soon. I saw you included a story about Cohen becoming CEO last week. Obviously, we spent much of last Friday's discussing the concurrent cancellation of the artist formerly known as Bed Bath and Beyond. So, uh, it just truly baffles the mind why people thought he was going to become involved with the company after he completely exited the position and told you why he'd exited the position when you interviewed him, and became CEO of GameStop. I doubt he has as much time for activist forays, or is going to have as much time for activist forays in the coming few years. I mean, the way I see it, he's kind of between a rock and a hard place because the stock is priced as though it's made a very successful transformation, and quite frankly, the business has not yet done that. So even if he's wildly successful, I don't think equity really sees any sort of favorable positive returns. In fact, I think he could be successful and equity still sees negative returns from where the stock's been trading, which is not a knock on him per se. It's just a statement of reality. The business was valued at around a 20th of what it trades at now before he became involved, and while while they've been taking cost out somewhat successfully, at the end of the day, you need to grow profits. And this, I just don't see where that comes from. But people want to talk about GameStop at the end, we can. Okay, so this story caught my eye earlier this week. I thought it was an interesting one, worth maybe talking about for a few minutes. The smallest $1 billion Powerball jackpot ever. As rates keep going up, the way that these jackpots work is you get a big headline number based on the annuity payment. So as rates keep going up and you see these 1 point whatever billion-dollar prizes, the cash portion is going to continue to go down. So it was interesting because you had Monday's prize, which had a headline, value, which is the, I guess, 20 or 30 year, depending on the particular game. I think Powerball's 30-year, but you're going to get paid over 30 years, and that is worth the 1.04 billion. Well, your cash value there is less than half of the headline number. It's 490 million in that example, which go back to ZERP era in 21, and that $1 billion headline prize would have paid you out almost 800 million. So I just found it fascinating, to read the story, which I don't know where the link is for it.
I added the link in the chat here, but it is crazy to me that it's even before taxes. So 490 mil cash before taxes. So after tax, I mean, think about where, depending, I guess, what state you live in, right? Lottery wings tax differently, so could end up with half of that, if that.
Yeah, which I think 200 something million dollars should be enough. I know the fin twitters who like to gripe about being middle class millionaires might say that's only upper middle class in their perverted worldview. Who knows? I'm joking.
I saw one of the recent big lottery winners was spending a lot of money on real estate. I saw people talking about that on Twitter, like a lot of luxury real estate. Curious.
They're going to burn through their
the
winnings
strategy
pretty
there.
fast, it sounds like. I mean, The truth of it is, though, right? The mindset of most people gambling is such that they're not like if you're acting irrationally and irresponsibly with money, just because you then obtain a lot of money, it's unlikely the underlying behaviors are going to change in your favor to become, very reasonable and rational and thoughtful with your expenditures. You just have a lot more that you can now spend. And unfortunately, hear all these stories about people that just go broke quite quickly. But I thought it was interesting. The story kind of talking about the mentality. If you're a user, if you're a consumer of like the lottery on a regular basis, what kind of impact does it have seeing the bigger headline prizes? But just again, a fascinating kind of conjunction of consumer behavior. I mean, there are many people who dutifully play lottery on a weekly basis, yet those people don't invest dutifully on a weekly basis. It's goes back to that kind of consumer psyche. Most people would rather keep, not most, some people would rather keep having that moonshot dream that's almost certainly not going to transpire versus the slow, steady, boring saving and investing and getting rich over a long period of time, which is not news to anyone, I'm sure. But anyways, yeah, included that story. Thought it was interesting. Be a good problem to have a 500 something $1 million tax bill or taxable income to pay. Okay, so the next story was in Bloomberg earlier this week, talking about funds utilizing AI, seeking to beat the market. It was an interesting read. I mean, the takeaway was that no one has consistently developed a strategy that's outperforming traditional, I guess, humans in finance yet. There was this kind of, I guess, Eureka Hedge index, which showed a pretty big negative spread between the performance of the main hedge fund index versus the AI sub index. So, yeah, I mean, look, I think there's clearly various ways we've talked about it, how AI is going to add value and productivity. It's clearly the jury is still out on whether AI can be a thing that enables funds to realize long-term outperformance and alpha. At least from what I've seen, I'm sure there's people out there that have strong opinions on that, one way or the other. One of the companies in the article noted that they're using deep learning techniques to mimic the human brain's complexity. But one of the points that the story kind of made clear is the limited number of data points. And if you're talking about a monthly data point in a company that's been around for 50 years, that's only what 600 data points, which isn't really enough, I guess, for a lot of these models. So yeah, we'll see. Where AI finance decision making evolves to. But for now, at least, from this Bloomberg reporting, it looks like it's yet another underperformer. There was a story in here about the Kaiser strike. There was some news today regarding the UAW strike. So, I mean, the Kaiser strike is something like 75, 80,000 employees on the West Coast, largely West Coast states, mostly California, striking Kaiser Permanente. And yeah, it's just a continuation of this theme of labor feeling like now's the time for them to pick up the pickets. And we saw the UAW, at least from GM, I think it was, is going to allow the battery manufacturing facilities to be included under the plan. The joint ventures they have with LG Chem had previously, those employees at the battery manufacturing sites have been left out of UAW. So I had just seen that come across earlier this afternoon, I think it was, that they've made progress on that front, which, yeah, I thought I saw UAW was not going to expand its walk-offs, so it looks like maybe they're making some progress. It sounds like they're making some progress, but yeah, we'll see how that resolves itself. Last story that was included before we can just open up the floor was uh, the story about Netflix. Yeah, I mean, there was just a graphic that I thought was fascinating, just showing the huge upticks in prices charged by these various streaming services, and just very quickly looking at the price of Hulu plus Max plus Netflix plus Disney plus Peacock, Paramount, Apple TV. I mean, you're already far in excess of what a cable bundle would have cost you. So it's quite fascinating how huge the prices are being raised on these services. I mean, these, I guess, were priced unsustainably low at the onset, but I don't know. I had put a poll out last year, specific to Netflix, kind of asking, what people would be willing to pay for Netflix, and it seemed like once you start getting up into the 20s, maybe mid 20s, a lot of people are going to cut their streaming cord, I guess. I don't know. Um, you know, I it's just crazy though to think that the cable bundle is certainly cheaper than all of these streaming services now, even though a lot of people have obviously gone away from cable. So yeah, um, so that's that. That's all I had to say on the materials we had prepared for today. So it's 4:23. Let's see what people want to talk about. Obviously, there was the very strong jobs report this morning, where we had payrolls almost twice as high as what had been estimated by economist consensus. I like Wall Street Journal's real-time economics newsletter, and they always send one out afterward, and there's a lot of good graphics and discussion in there. So I'm kind of scrolling through. The truth of it is that with all these kind of labor issues and strikes and the like, wages continue to come down and are coming in at levels that are in line with what the Fed would want. So in the last 3 months, hourly earnings were up 3.4% annualized. I mean, granted, that's 3 months. It could reverse itself upward or downward, but that's roughly in line with that 2% inflation target. So there's doesn't seem to be much evidence of a wage price spiral issue. Uh, Even though labor clearly feels emboldened in some cases, um, it just doesn't look like we're caught in that sort of a wage price spiral. But for as long as people have jobs, they're going to keep paying their bills, and it's nice to see labor force participation, recovering to above pre-COVID levels, but on a longer period of time, still, for prime force labor participation, it's below 90%, which really is below where it was before the financial crisis. So, could there be more slack than people had thought in labor supply coming back in? The current administration has done a lot to expedite and increase the number of people coming into the country legally, which has obviously helped some of the labor constraints. But yeah, all in all, it's hard to think that the world is about to implode when labor market keeps chugging along.
One tweet I saw this week, and I'll pin it in the nest right now, is from car dealership guy. We've talked about him in the past. Now, he can be a bit sensational, but he tweets out $736 a month is the average monthly payment on a new vehicle, saying it's now at an all-time high. And of course, he has to throw in his little fearmonger piece. Ladies and gentlemen, we may be witnessing the peak, right? He's always sending out little tweets like this, so take everything with a grain of salt. But that's still an interesting data point if it is via Edmunds. $736 a month now is the average new car payment.
Yeah, it's just mind-boggling to me. I felt like a car payment over $300 a month was a high car payment. I still feel that way. I don't have a car payment right now, but I do have to go into the market to buy a car at some point before the end of next December when my battery warranty expires on my Volt, and um, so I hope prices go down.
Yeah, more of an opinion than anything, but I don't think anyone middle class in America needs to purchase a vehicle much over $20,000. I think you can find a great used Japanese car or even something European if you want a little bit more class, right? But it's still 20,000, good price point to be in. If you're looking for a truck, maybe 30. I don't know why people think they need a new car. I don't know. I've never understood that. For me, when I shop for a vehicle, I'm looking for the highest mileage thing I can buy. Not a shitty car, right? Something that tickles my fancy, something that I appreciate, something I'm a bit of a car enthusiast, so I love something fun. But still, I can find a lot of great options in the 20,000 range. There's plenty of sports cars, plenty of SUVs, plenty of crossovers, plenty of hybrids. It's a great price. To be at less than that even is totally doable. So I don't understand this the new car hype. I don't understand the 736 a month. It's just not for me.
A big driver of that going up has been mix because the big three OEs can't make passenger cars profitably in this country due to their structurally higher cost, which is only going to go structurally higher from here if UAW gets its way. So, they've leaned into making these tanks that people like to buy, apparently. It's very frustrating for me as somebody who thinks everyone should drive a small hatchback and the world would be a much better place, but I don't design the cars that people buy. One other thing that I
Yeah, what do you have?
saw,
You have the hybrid Bolt, or is it the Volt? I don't. I can't tell them. Can't tell them apart.
they look completely different. The Volt with a V,
Well, I mean like the name. I mean the name. Like what's? I can't remember which one's which. The Bolt is the hybrid,
no.
correct?
The Bolt is the fully electric uh, utility vehicle. I think they call it an electric utility vehicle. Is what GM
Okay.
likes to come up with types. They liked to call the first gen Volt an EREV, extended range electric vehicle, even though you could call it a plug-in hybrid like everyone else. So General Motors is just special. But we were talking about cars a lot. I think it was it last night? Andrew, I see you in the audience. Was it last night that we were talking about Tesla and cars? Losing track of time. But like one of the big issues with used cars is you could buy a 10, 15, 20, 30-year old used internal combustion engine and it's going to run just fine. Um, there, unless something there's a step function change in battery technology, you're not going to be able to go out and buy a 15, 20, 25, 30-year old electric car. It's going to cause cars to have much shorter not lifestyles, lifetimes, because batteries, as we all know, degrade over time. And unfortunately, the replacement cost for battery packs are, for many vehicles, akin to totaling them. So I'm very worried what happens to countries like the United States that are trying to force all consumers into EV, yet they're structurally higher cost. Obviously, you get then people coming out and saying, "Oh well, look, the Tesla Model Y costs less than the average vehicle." I mean, that's fine and all, but again, if you look at a Tesla Roadster 15 years on, what percent of road life do you have left at that point? Your pack is probably degraded down to somewhere in the 70-80% range. Again, it's going to vary meaningfully based on the type of cooling system you have. The early generation Nissan Leafs were complete trash and went bad after just a handful of years if you had them in Phoenix and the high desert because it was air cooled and not liquid cooled. But regardless, this is just it's a big change. These vehicles cost a lot more to repair. uh, you they're not supposed to. They're supposed to be cheaper to repair, but they're a lot more expensive to insure. There's a lot more componentry, technological wizardry, sensors, etc., that are on the vehicles that are expensive. Small fender benders can lead to vehicles being totaled. And I guess if we get eventually to a world that Elon envisions where you can make these vehicles at such a low cost that they are in fact like disposables and the profit is all accruing to the services the vehicle sells atop, maybe. But in the interim, it's just a really ugly scenario. Like you said, the average person, I mean, shouldn't be buying a new car, but a lot of people like to keep up with the Joneses. So I don't know. Some rambling on automotive since we always like to talk about automotive. One other thing, I'll take it away from automotive for a second. I saw recently that it's just so incredible. It just speaks to how irrational markets can often be. The United Kingdom threatening to ban smoking for people by a certain point in time. One, it's not going to solve your black market problem. You're going to lead to a outsized growth in your black market. That has its own problems. That's what countries that have tried banning smoking have seen. But two, British American Tobacco, despite the name British, generates literally less than 2% of its revenues from the United Kingdom combustibles. It's around 1% or so of free cash flow comes from the United Kingdom combustibles. Yet the stock declined far more than 1% or 2% over the last few weeks. Let's see here. Over 1 month, it's down 6. Over 6 months, it's down. Well, that's a little too far, but yeah, just another good example of markets overreacting to headlines. What is the impact on long-term free cash flow? It's not, a near 10% drop. It's low single-digit percent. But again, I think BTI is just one of those extraordinary opportunities the market's presenting right now. Your yield is closing in on 10% at this pace, and that's only at a 65-ish% payout. Um, you know, Unfortunately, I don't know that management. I mean, these guys are ham sandwiches. They're not going to be smart enough to go into the market in the fourth quarter and repurchase slugs of shares. They're probably going to wait till the February annual report to kind of announce that. I'm sure the price will recover somewhat between now and then, but yeah, I mean, they should just be slamming the buy button on buybacks, given they can retire equity at a high teens cost, which is just a massive spread from what they're able to borrow at. And nobody likes tobacco here except me. I don't even like it. I just think it's an extraordinary investment. But anywho,
When BTIDD.
well, if we do that, then it'll probably go down to $20, and I can go 100% in. So let's do it.
The old inverse Jimmy DD, a classic.
And I'm just going to pull up on my screen. I just, again, I'm so blown away by it. You're talking about getting, what has historically been among the greatest businesses in the history of of capitalism. Uh, Trading, you're paying 6.5 times forward earnings for it right now. Yeah, it's, it's beautiful.
With a dividend, correct?
Almost a 10% dividend yield. Yeah. Okay, so no one wants to talk today. We can wrap it up sooner rather than later. Then, whether we go to the top of the hour. Um, yeah, I don't know what people want to talk about.
bring up Monative here. How you doing, Monative?
Doing well, thank you. I was waiting for you guys to finish talking. You seem to have it going there, so I was just waiting.
Well, you're always welcome on the panel.
Sometimes it's just good to wait and listen.
I was just trying to fill the dead space, so people would people
There's
would
a
rather
lot of
rather not hear me
there's a
rambling.
lot of interesting underlying trends happening, and I think people are just. I mean, today on top of the employment news, I think one other news item was that restaurant employment has gone back to pre-COVID levels. It just why would that be if the consumers were not coming in, right? So it's just it may be a little thing, but it's still a sign of strong consumer demand. So there's a lot of things that look very interesting to me. Again, it requires probably tighter stops. It requires prop more trade management than you would in a normal sense, but doesn't mean that the opportunities are not there, right? I've been selectively bullish. The the number of stocks that I'm bullish about is pretty narrow, far narrower than it was 3 months ago, and a fraction of what it was 3 months ago, narrower than even a month ago. So it is there. I think I've talked about the themes I like, which is basically completion of a SaaS transition to a recurring revenue model. Potential buyouts, M&A is pretty hot in tech and outside too now. And I think it's only barely starting. I think we need a lot more consolidation in tech. And the third is, guidance beats, right? I mean, look, that one uh, has got a very short fuse, right? It's not that you get a long rope if you beat guidance, right? Until you have to beat it again to keep it. Otherwise, you're going to lose it all, right? We've seen that time and time again. But at least until earnings, these are stocks that tend to do very well unless they've come out and guided down already, which they've not, or most have not. So that's the other point, which is pre-announcements pretty light. Most are based on some specific, not business related thing. Clorox was one. What was the casino was the other one? What was that? And they were both hacked, and they lost a few days of business or a few weeks, and they had
MGM,
MGM. Sorry, yeah, it was MGM.
just FYI, for consumers, it's still their systems are still not back up. I had to call them to try and adjust the reservation, so it's still a bad customer experience going on. I think it's been more than a month now, something close to it.
Yeah, they said they're gonna lose 100 million or something like that. So yeah, but those are specific cases that happen to an individual company outside of normal business. Point I'm trying to make is it is earnings focus here on out. I think it started a couple of weeks ago. People just didn't see it that way, but it is earnings that's the prime focus, and you're not guilty until proven guilty. So companies that guided up did well last quarter have a bit of a run, and if they miss, or if anybody in the sector misses, you're shot to hell, and it's there's no going back after that. But at least until that happens, this upward momentum could stay, and you can see that with so many of the stocks that ran up in the last week. And they all share that one facet, at least in growth I'm talking about, which is basically that they beat and significantly guided up, and some of them, you have to remember, reported only late August. So things have not changed enough or things could not have changed dramatically enough in the last 5 weeks for them to not, or to change from their guidance. So that's one. China is starting to get weird. I just don't understand. I still don't trust their numbers. That's the one problem. But um, iron and steel production is up. Iron ore consumption is up. Um, dry bulk rates are up. Uh, and today they announced that the big buyer there that buys for all their mills is starting negotiations with the three majors, right? Or four if you include Fortescue, but really three: Rio, Vale, and BHP. So there's a lot of interesting things. And today, UBS upgraded BHP from sell to hold. I think I think any negotiated, new deal and significant uptake in iron ore is going to change things dramatically. Why would they be buying iron ore if they're not seeing demand for it? I mean, their exports are down in so many things. I doubt they're trying to flood the market somewhere outside of China. It's possible, but anyway, those are all the things I'm looking at that are interesting to me. I think this if you're very careful, if you pick through the mess from last week, there's a lot of quick 15, 20, 30% to be had before those companies report. I wouldn't hold this time more than before. I wouldn't hold any of them through earnings. I'll take that run. If I missed it, I'm okay with that. I'll buy it back if it's so special after earnings.
Good stuff, Monative. Appreciate hearing your perspective on things.
Yeah, I did the best the statements from MGM. So there's the internal statement to employees and also the public facing statement. So the company says that they believe that criminal actors obtained personal information belonging to customers prior to March 2019, including name, contact information, gender, date of birth, driver's license, and some social security numbers and passport numbers.
It's the hack itself was rather simple. They got hold of privileged account details from some internal source. Maybe there's insiders, but they called in the support numbers and had them reset the second factor passwords of the privileged accounts and bypassed Okta altogether. So Okta was named in all three. Unfortunately, they had to go and explain, hey, this has nothing to do with us. You change your password, we can't help you.
Yeah, nowadays most hacks like this are social engineering, right? You find an employee that can maybe get fooled by a phishing email or some sort of fraudulent link, right? Have them click on it, sign in, then they hand over the password or whatever. And then also the SIM swapping trick's been around for years now, where essentially these people that work at these mobile carriers like AT&T, Verizon, T-Mobile, they're not the smartest bunch sometimes, and you can go into the store, or you can call them with a fake, or you can use a fake ID when you go to the store, or you can call them and just convince them like, hey, I lost my phone, I need you to put my phone number on my new phone. Here's my new phone number, or here's my new phone, like here's a new IMEI number. I need like my SIM on this phone, blah blah blah. Make up some excuse, whatever, maybe seem in a panic. They're going to help you. They're going to put your phone number on the new phone. You can just spoof your caller ID. You can, like I said, fake ID. It's not hard to fool these people. Think about what happens when you go to an AT&T store. How do they verify that it's really you? Is they just kind of want a driver's license, right? And I mean, it's what, $50 to get a fake ID, just from what I've heard. So pretty much the easiest trick in the book. You get their phone number, then you can reset all their accounts because they use two-factor authentication. And that's how a lot of crypto people ended up losing their Coinbase accounts and things like that, is through the SIM swapping. So yes, if you have two-factor, I recommend using an authenticator app instead of your cell phone number. Or one of those keys. They make like USB keys. You can just plug into your laptop and keep that physical key somewhere in your home. And every time you want to sign into your Google account or your Twitter account or whatever it is, you have to insert that key. So that's pretty foolproof.
Just going to go back to the UAW quick to update, kind of recap the news from earlier this afternoon. So UAW won't be expanding against Ford, GM, Stellantis with new walkouts as the talks continue to progress. They reached a last-minute deal with GM to include battery plant workers in the new national labor contract. And yeah, that's where things now stand. They're not escalating. They're apparently satisfied with getting that from GM. But the latest offer from Ford is 23% pay raise, is what the UAW president disclosed, compared to the 20% offers from GM and Stellantis. The union wants to emerge from the strike with at least a 30% pay raise, down from the 40% increase it initially sought. So
I also saw that they agreed to index to inflation. Is that correct?
Ford's proposal, combined with a cost of living allowance to account for inflation, is likely to meet that threshold, according to a person familiar with the matter, that 30% threshold. So it sounds like the Ford deal would. I just go back to how much higher paid these workers already are than all of their competitive workers, and how structurally disadvantaged the big three OEs will be after this. So yeah, it'll be interesting to see what happens to labor that's not organized, and are they able to negotiate better pay rates with the Koreans, the Germans, and the California, I guess Texas-based, whatever we want to call it now, automaker.
Rod, on that, right? It's also a matter of time. I know it's probably a long time, but they're not replacing every retired worker with one more worker. Maybe three or four get replaced for every 7 or 8 that retire. So it's becoming more automated. So it's a matter of time before this resolves itself. But that could be 2-3 decades.
Right. I mean, the number is something like 30% less labor per automobile, per electric car versus ICE. So yeah, there simply is less labor that will be needed in the future.
Did you see that update from Raytheon? So they originally, one of the things was that they're going to replace that part entirely for all the 8-900 engines. Now they're saying that they have started the work. They have taken out 183 engines from the wings. They're working on them, and they will only need to replace the ones that they find the flaw in. So the rest they're just going to leave it alone for the back after checking and signing off. So it's interesting. I mean, I put out a tweet today that, hey, this could be a tradable bottom. I'm not sure. I still think it goes to the low 60s, which is where I would happily buy it hand over fist. But it's getting close. And I also want to, Thursday pre-market, uh, Delta is going to report. Delta has, a massive fleet of both Airbus ones that are impacted by Raytheon and the Boeing ones that are impacted by that, the fake part. So that's going to be very interesting what Delta says, and how much how much damage is occurring to them, how many they have to ground. I think this Raytheon one, I did a quick check. I think there are 247 A220 through 321. Sorry, 220, 319, 320, 321. And Raytheon's last update was before this was it could take them all the way through 2024 before they complete all the work and fix everything and sign off. So it could be that if they start finding problems ahead, they could have planes parked, and there's probably a significant challenge, legal challenge for Raytheon. So my guess is I will still wait for the low 60s for a flush there on bad news to pick it up, but it might not get there based on what we saw today.
Yeah, I don't follow it as closely as you mounted. I had seen some reporting on it, but that, yeah, I mean, it's under seven, closed under $70 again today. You're talking about almost now, single digit on the EV EBITDA multiple, which you're taking it back to almost decade ago levels from at least that valuation measure. Yeah,
Well, the forward looks ugly. Remember, right? They're going to have to take all these losses, so you got to be careful there. So yeah, the TTM multiple looks better, but which is why I think this is going to be a kitchen sink quarter. It's going to, they're going to have to dump everything into this quarter, come out clean. Hey, hey, remember, it's not just this. The F-135 engines, which is the engine that powers the F-35, has its own set of problems. It's got a lot of issues, but even worse, the upgrade cycle for it is behind schedules. They're still not hitting the performance, and it could be, all said and done in the next 2 decades, it could be over 20 billion, over budget. So this is pretty ugly for. I mean, Pratt and Whitney has had nothing but bad news for Raytheon the last 3 years. It's just been ugly, and everything else is, well, whatever else is left has been absolutely perfect for Raytheon. But this one's been very ugly, which is sad because the other part, right? GE now becoming a pure play engine company is clicking on all cylinders. They're just hitting it out of the park every quarter. That's all I got, man. Or at least that's the interesting stuff I got.
I appreciate it. It's always nice to hear what you're following along with. Um, it's pretty big moves in energy markets last week or so. Just complete implosion in gasoline crack spreads. Pretty big decline in crude oil prices. Uh, Still seeing U.S. rig counts keep trickling downwards, though. I'm not entirely sure that oil makes it back into the 70s. Uh, I'm a little surprised it got as low as it did. But definitely a lot of players in energy took it on the chin the last couple of weeks. My beloved refiners, when cracks are imploding, certainly not feeling very good about that. And there's also kind of the few interesting things. One interesting thing on the trucking side, people don't realize how much of freight for truckload freight is just food and beverage. So this whole uh, like last week, I guess, of what's the impact of these weight loss drugs on consumer, caloric demand. There's a pretty meaningful impact on a variety of things, right? You got the Bloomberg reporting, what are airlines set to realize in terms of fuel cost savings if people lose weight. You're going to see an impact on the roughly 1/3 of you know truckload freight that's moving food and beverage. Is there going to be less demand for less food and beverage? So just interesting second order effects stuff kind of permeating from these drugs, which then you get how crazy the market wants to try and front run it and send Coca-Cola down to a 52-week low because people aren't going to drink Coke anymore. One thing I will say, I made this comment in a chat earlier this week. I've never seen the spread between the non-branded sodas to the branded sodas as wide as they are today. Like my Publix has basic cola for $1.25 for a 2-liter, yet the branded 2-liter, insert Pepsi, Coca-Cola, whatever, is $3.50. I don't remember the spreads ever being that wide. So I do wonder for all these branded consumer products, people have loved to pay up and been rewarded for paying up for some of these candy makers and snack food makers, and maybe this is a rude awakening for them.
I mean, the analysts are jumping the gun on this, right? So there was a Mizuho analyst that took down estimates for a company called Toast, Tost, which makes software for the retail vertical, restaurant vertical. And because of his name is Dan Dolev, you can look up. I pinged him. I said, "Do you really have enough data to actually make a call on a single stock on this?" He never replied, but it's one of those things. I think we're getting way ahead of ourselves here. I mean, this is yesterday. Of course, there was a news that these GPL-1 drugs, have a side effect of stomach cramps and few other things. So we don't know how long this is going to remain uncontested in the market in the first place, and how many problems it's going to have, and what's going to happen. But yeah, I mean, for now, Lilly is cleared to go wherever it wants to go at this point. I don't think there's an upper limit for Lilly and Novartis.
Unfortunately, the app's being really glitchy. Someone had requested to speak. I tried bringing them up. Joe, I don't even know if you can hear. It says you're a co-host still. I can't do anything to make you a co-host. It says you're still a co-host here, but yeah,
He's not.
it's funny though, Monative. Here, I'm just going to remove him from co-host. Maybe it'll let me add him back then. But you know how the market wants to front run all this stuff. Like it front ran the shit out of AI, even though now maybe it's realizing that those cash flows are a lot farther out into the future than it had thought. And now maybe it's over estimating the impact to staples and branded food and beverage products from these drugs that are still, it's unclear how many people are going to take them, what the long-term effects of them are, et cetera, et cetera. I mean, Coca-Cola, the multiple in just the last 2 months has come in 3 turns, which is pretty significant for a big staid player like that. I saw somebody jokingly say, "I guess Buffett must be puking out his Coca-Cola position." But I just don't. The spread seems so extraordinary for consumers that maybe can't afford to pay 3 times the private label product for the branded product. Like I was explaining, is at least my local pricing. Like I don't care. I guess I'm unusual. I don't care about the brand, but I was asking people, like, is that how just because I thought the spread used to be a lot narrower than that. It used to be maybe less than 100% premium to get the Coca-Cola product versus the non-branded product. The fact that it's now almost 200% higher, just there's got to be a point at which customers rebel against those high prices for branded products. And I know people have talked about like Treehouse Foods and some of the private label, companies maybe being more interesting. I don't know. I just had been looking at those prices and I'm like, I refuse to pay that. It's just crazy to me.
Going back to automotive a bit, and thanks, Rod. Looks like I'm able to speak now. The Twitter app was being glitchy, so I wasn't able to tune in as anything more than a listener, but now it looks like we're back to normal. I'm going to pin in the nest this tweet on the F-150 sales of the Lightning model plunging 46% amid what Ford is claiming as quality checks. Seems like a weird excuse. I mean, we remember Jim Farley, the Ford CEO, back in August claiming he had a reality check after trying to take the Ford Lightning on a road trip, saying it was like a bad experience. And there's plenty of automotive
Oh yeah,
journalists
taking
that
any
have
electric
covered.
car on a road trip sounds like a terrible experience. I don't know why that would be a wake up to anyone.
Yeah, and I remember the automotive journalists publishing stories on how it's so bad at doing truck things, like towing with it, your range is going to be abysmal and things like that. So it seems like immediately off the release, the sales were hot because, Ford is launching an electric truck and it's bringing back the Lightning name, and, the Cybertruck's not out yet. So this is like the best you've got. So like people are bought into the hype, but now the reality set in that it's just not a great experience to own one of these. So it's interesting they're blaming quality checks for the sales plunging, but I think just people are over it. If it's not, meeting their expectations, they're not going to buy it.
Well, and it's
And
impossible
yeah,
to ignore the price cuts that Tesla's just shoveling atop their products to ensure they can get them off their lot and not have the huge working capital build. So I mean, it's tough. It's a tough spot for the legacy OEs that are basically now being forced to cut price, even though cost is you know, not something that's been favorable for them on the EV side. Uh, and I think I forget if it was you who shared it, somebody shared it, that IRS is now going to allow new car purchases, I guess the dealership to kind of take the tax credit at the point of sale off of the price of the vehicle.
yeah, I shared that one on Discord. I'll find it and put it in here too as well. But you know my story. I went on a road trip in a Tesla Model 3
This space was downloaded via spacesdown.com. Visit to download your spaces today.
late last year, and it was my first time ever going anywhere from Southern California all the way up to Tahoe, anywhere going that far in an electric vehicle. So it was an experience. I mean, every 45 minutes to an hour, we had to stop to charge because typically you want to charge when you're at like 20 to 30%, and you only want to charge to about 80%. So then you're stopping for about 20, 30 minutes or so, depending on how fast the charger is. And then when you're there, you still have to pay for the charging, right? It's not free. And now that you're stopped, now that you're out of your vehicle, now that you got time to kill, charger's probably at a shopping mall or at a Panera Bread or something like that. So you're going to go inside, you're going to go into Panera Bread, you're going to buy yourself some mac and cheese, maybe a bread, maybe a coffee. I don't know. You're going to buy something. And lo and behold, now you've racked up a $20 bill at Panera Bread you're paying for charging. It's costing more than it would to have a gasoline vehicle. And now with the insane, price cuts over at Tesla, you could just buy a Model 3 if you really want an electric vehicle, and
Make sure you
also
wait to buy
buy a
that
used
Model 3
truck.
until they cut prices
Well,
again.
yeah, I'm not saying I don't recommend it. I'm not an EV guy, but you could if you're a Ford Lightning potential buyer you could just buy a Model 3 and also buy an old truck. And then when you need a truck, you drive the old truck. And when you want to do your daily commute, you drive the Model 3. But I don't think a lot of people that were looking at Lightnings were even in that, target demographic for cheap Model 3 anyway. I think people that shopping for a Lightning are, like we talked about again, with people spending $736 a month on a car payment, are kind of looking to impress their neighbors, looking to have the fun new toy. And I think it's just not novel anymore. I think people are over the Lightning.
So a couple data points. Cox Automotive is a great resource, and just 2 weeks ago they put out their third quarter update, and the graphic I have on my screen shows a widening spread from year to date, where days of supply of internal combustion engines on hand has really hovered around the 55, the 50 to 60-day supply on hand throughout the whole year to date. Pretty flat, but there's been a big surge in EV supply. So EV inventory days supply is at 89 on average year to date. It's at 97 now, so it's 60+% higher than ICE. Granted, Cox is excluding Tesla, Rivian, and direct-to-consumer platform brands from that, so it's a little bit skewed. But big uptick in EV supply, and then you can see that's even with the huge deterioration in price on the EV side, which is not just going down on Tesla, it's also the other OEs. And then another good just data point is to see the days supply from a brand perspective. So you can see certain brands here, if I can find the right page, like the Koreans, the Japanese brands, those are in very tight supply still, whereas Stellantis brands, Dodge and Chrysler have the highest days of inventory out on the market. Jeep is also up there. Yeah, Dodge, Chrysler, Ram, Jeep. 4 of the 6 worst inventory situations for Stellantis. So, I mean, it's obviously a bifurcated market. I still think, look, I mean, Toyota, as much shit as green zealots like to give them, I think Toyota's had the long running strategy of the correct strategy of, we're going to wait until the technology's there. We're still very much invested in hybridization. And I think they're spot on that if the true point was to reduce emissions, that you could reduce a lot more emissions hybridizing every vehicle on the road today versus putting a couple of EVs on the road based on the constrained supply of battery materials still. But we'll see what ends up happening. Clearly, Toyota, though, still super tight supply. My experience wanting to look into Toyota products was that just to get the opportunity to test drive one of their products, I would have to put down a refundable deposit for the dealer to allow me 6 or so months down the line to test drive the car. So they're clearly not having issues selling internal combustion and hybrid vehicles at Toyota, Honda, and Kia. But again, like we said, just a very different labor cost structure than the big three. They can make small vehicles profitably. The big three can't in this country.
You're looking to test drive the new Prius, weren't you, Rod?
Oh yeah, I would love to get the new Prius, but I probably won't.
I've seen a few here in SoCal driving around. I'm not sure if there's any you see on the streets over in Tampa, but I figure you could maybe rent one on Turo, give it a shot.
Well, I mean, the thing is, I was like to the dealer, I'm not going to buy a car without test driving it. I don't know how any consumer could possibly, in good conscience, buy a car without ever driving it, but I guess people do it.
Oh, by the way, I did find that tweet on the EV credit being used at point of sale. It's pinned here in the nest. It's by Sawyer Merritt. U.S. Department of the Treasury, IRS, released guidance to expand access to clean vehicle tax credits, help car dealers grow business.
Yeah, the spread between the new retail EV price and internal combustion engine price is at its narrowest yet. And that number looks to me to be pre-credit. So after you factor in the tax credit, if you're eligible to claim it, you may be getting a new EV for less. But I always get back to, well, what is the vehicle worth at the end? And I still am unclear on, for a long time, because Tesla was, I guess, really the only one at scale here. The used prices held up fairly well on the Teslas, at least, but now they're, of course, plunging through the floor as the new prices plunge through the floor. And it also gets just back to what is a 10-year-old EV worth relative to a 10-year-old internal combustion engine? The how much battery life is left on it. You may only get, if you have a module fail, you're going to total the vehicle. So I don't know. I still think there's a huge reckoning coming down the pike as the all-in on EV crowd realizes the mistakes too late in the game. But that's just me. Why can't we just all have plug-in hybrids?
Pinning to the nest now, this story tweeted out by Zero Hedge. Home buyers under 25 are flocking to the Midwest. And using data from the Federal Financial Institutions Examination Council's 2022 Home Mortgage Disclosure Act. It realizes that many of the states with the highest shares of home purchases loans from adults under age 25 are found more in the Midwest, led by Iowa at 11.5%. So some interesting charts in here as well. If you're interested in the real estate market, it's definitely a story to look at.
I feel bad for the people that are flocking to the Midwest. Sorry, not sorry.
Yeah, I can't do it either. I mean, I lived in a Sprinter van for almost a year, spent a lot of time driving through the Midwest, and that's exactly what it, what it means to me is just a place to drive through. It's not much to do. It's a whole lot of farms. I got to appreciate it, right? Glad we have it, but could not live there myself. Oh my God, I need the ocean somewhat near me. Within a few hours is acceptable. I don't need to be as close as I am now, but I can't be like in Iowa. That's just not me. I don't know about you, Rod. I don't know if you give it. You've lived in New York and Florida, correct? Anywhere else?
No.
That's it.
Yeah, I couldn't tell you the last time I went to the beach.
Rod, you
It's
live in
been
Florida.
years,
Come
probably.
on, Rod. Rod, come on, buddy. You're going to come visit San Diego, and we're going to go to the beach together. It's be your first time going to this beach. You've never been in this ocean, have you?
Yeah, you just got to go far enough south, swim out into the water, and you can cross the border, right?
Yeah, I mean, I remember the border getting into Mexico is very easy, but getting back in is a little bit harder. My first time ever visiting Mexico, I was here in San Diego, and I had a friend who was Mexican. He tells me, he says, "Joe, I'm gonna go to Mexico for a dentist appointment." He's going to Tecate, Mexico. He doesn't have health insurance, so he's gonna go to Mexico, get his teeth cleaned, come back. That's all it was. It wasn't even anything more than that. Just teeth clean. Drive down only about 25 minutes. He's like, "You want to come with?" I'm like, yeah, sure. I haven't been to Tecate, Mexico before, so hopped in his car, drove down to the border. He parked his car on the U.S. side. You pay $5, $10, some parking lot, and then you walk across, so you don't have to deal with getting your car through, which is always a line. So we go across, and they check my passport, and he goes through, and they never checked any passport of his. Never checked anything of his. And I asked him, like, hey, Amos, buddy, like, they didn't check your passport? He's like, dude, look at me, I'm Mexican. That's it. He sure as hell. I mean, he looks Mexican, so they didn't even ask. But then coming back through, getting back into the U.S., it took twice as long to get him back to the parking lot as it did for me. So just the mentality over
So a
there.
quick Google search for medical tourism growth got anywhere from low teens CAGR over the next decade into the mid 20s CAGR. So medical tourism is a growth space, and yeah, I mean there's a very local example of it right there.
I mean, it makes sense with travel getting cheaper and cheaper, and the internet really increasing people's exposure to the medical care in other countries. I mean, it makes sense. Like, if you're going to get some big surgery done, some big operation done, why not see where else you can get it done for less? I got my eyes fixed this year. I got LASIK, and I remember a buddy told me to go to Colombia. He said I could get it done for $1,000. And here in the U.S., I was getting quoted. First of all, I learned that this stuff's negotiable, and I never knew that. I had
Every
gone in
single
for a
service
consultation.
or product you buy is negotiable.
Yes, but I didn't know. Laser eye surgery was. So that was new. I didn't even figure they had that kind of power in the office to give me a better price. But yeah, no, I went in. They quoted me per eye $3,000, and I didn't know why they even do like per eye. Maybe somebody needs one eye fixed or whatever. Not sure. But anyway, they quoted me $3,000 per eye. I told them, I was kind of I was joking around a little bit. I'm like, well, can you do $2,000? Like, I didn't actually even think it was something I could do. I just threw it out there because why not? And I was just being a little playful, having fun with it. And she's like, let me see what I can do. And she leaves the room, talks to somebody else, comes back. She's like, yeah, we could do 2,100 per eye. So there you go. It was an experience. I ended up getting my eyes fixed, got LASIK, went from needing to wear glasses every day to never again. And I get free revisions for life for as long as this chain stays in business. So that's cool. I mean, I guess when I get older, my eyes get worse. I can go in there and get them touched up. I don't know, but hey, if you haven't considered this and you're somebody that wears contacts or needs glasses, it's great. I woke up next day, no pain, perfect vision. My friend who got it done for $1,000 in Colombia said he was in agony for like 3 days. So I think just for the security of it all, when it comes to my
Well, it sounds like he didn't
eyeballs,
get LASIK. He got the
spend a little bit extra.
PRK or whatever the other procedure is.
Yeah, it might have been PRK. Paul, coming up to speak. Paul, how's it going?
And Andrew's got his shark
Yeah, not bad.
profile pick back. He went away from the bear, I see.
Hey, what's up, Rod? Not a bear today. I had a nice day today, but I don't know. Did you guys talk a little bit about PayPal? Have you been looking at PayPal? I think it was trading
We
like
didn't
50.
talk about it. Was there something you wanted to talk about it?
No, I just noticed recently. I mean, I don't use PayPal much, but I was looking at their valuations, and it was trading down like 55 to a new low. But the thing was, they now have a savings feature. I don't know if this is brand new, but to me it is. It's through Synchrony Bank, where you can transfer your balance and get a 4.3 APY. So that's good that they're finally paying interest on the balance if people do it. And then they're pushing a lot of online shopping rebates from like 1 to 10% back from various retailers or companies. So I found that kind of interesting. They're also pushing for Venmo for kids, and I believe there's a debit card or credit card. They're really trying to push out, tap into the youth. So they're doing some interesting things.
When you hear all this, though, sorry to interrupt. When you hear all this, though, it just can't just be me. Don't you ever think about how little of a moat these fintech players have? Because literally all of them are doing the exact same thing.
Maybe the case. I mean, I don't own it. Maybe the case. I was just looking at it. I think it's interesting. I think one of my buddies owned PayPal when he was in the 60s, and he made some money. He sold it around 70, and I told him I thought it was going to 50 or below. So it's getting down where it could be interesting, though, to me at least.
And they'd paid, what was it? Yeah, I have it on my screen. $4 billion cash 3.5 years ago, and they bought Honey, which I think is in conjunction with what you were referring to, kind of the little Honey browser add-on that lets people, click through and get, whatever percent cash back. They'll sometimes do targeted pricing through that. I mean, 4.3 for high yield savings is not terrible, but
well, yeah, I thought it was just outrageous that they never actually paid anything on the balances via PayPal or Venmo. They don't do it through Venmo, but
I want Starbucks to pay
Yeah, I
me
don't think.
for my dollars that I leave on my Starbucks Gold card. When are they going to start doing that?
Didn't they put out an analysis earlier? Yeah, I don't know if it was this year,
On how
probably
much they
last year,
make
where
from
they're
the float? Yeah.
there was
Yeah, that's what I was going to bring
yeah,
up.
it's I'm holy shit, this is off of the fucking of their own system. God.
Gotta wonder what would happen if everyone that had a Starbucks gift card came in on one day, cashed them all out.
Yeah.
Wait, Rod, didn't we talk about it in the past? The amount of airline miles that are floating around and actually bankrupt them if everyone
Yeah.
just automatically used them at the same time.
I have so many miles I need to use. The latest data on Starbucks, though, yeah, it's over 1 billion is what I'm seeing. I don't know the precise amount that they have sitting, on gift cards and the like. From It's a lot of, especially with interest rates going up, it's a lot of money to have, to float from. Yeah, I mean PayPal, Andrew. I've been kind of tracking it a bit. I definitely agree with Paul generally that there's not much of a moat in these different products. There is a point for sure. I'm like, wow, the valuation is really not very demanding. I do use their services occasionally, but it's not like I'm a profitable customer. I don't leave the money in there, and when they try to ask me to pay an extra, 1% of the dollars transacted to make it instantaneous, I am most certainly not needing to expedite my money transfer. So, I mean, I just don't know. I probably wouldn't touch it.
It's actually interesting because I used a very big Venmo person myself, and then I just caught myself more frequently using just going straight to Zelle. I don't even bother anymore because if I had to do Venmo somebody, I would just have to add that extra step to put into my account, and it's why?
Yeah, I prefer Zelle as well. I think Zelle's more popular than it is on the East Coast. From what I've felt out, whenever I hang out with people from the East Coast, they tend to have Venmo, and people out here in Cali use Zelle a bit more. Maybe that's just my own personal experience, but yeah, of course, Zelle just eliminates that extra step of waiting for it to transfer into your bank. But when I go out with friends, when I go to dinner, when I buy somebody a drink, I will gladly be the one to take the bill and then collect the points and let everyone else Zelle me or Venmo me, so that I've been the one getting that extra few bucks off the points, and just got to deal with everyone else making sure they send the money. You become a bit of a mobster going after them.
Yeah, if you don't get a full collection, you're gonna be out of pocket there. Your whatever percent cashback isn't gonna offset your failure to collect in full.
Yeah, that's happened before. That has happened before. You live and learn. Sometimes you take the win, sometimes you don't. It's all about those points. Rod, you had just signed up for was it Citibank? A new card you were going to use only on Apple Pay? How's that been going?
It's a U.S. bank product. It is their Altitude Reserve card. So it before you factor in the cost of the annual fee, nets out to a 4.5% cash back on all Apple Pay transactions, which has been wonderful because I never was a big user of Apple Pay, but I've shifted as much spend as I can toward it. I just paid my car insurance, so 4.5% cash back on my State Farm bill. Love it. Costco, we spend many thousands of dollars a year there, and you can use Apple Pay at checkout. So my Costco cash back is now 4.5%. Yeah, it's going to become the card won't be in my wallet because I don't intend to ever use the card, just my phone. But
Oh, I didn't know. I thought Costco, didn't they have an exclusive with Visa? But they also do the Apple?
well, it's a Visa product, so I don't need to worry about that. I just use Apple Pay at checkout, and I get my 4.5%. It's really 3 points, but you can redeem the points at 1.5 times value for travel through there. So, it's got an annual fee. Depending on how much you're going to spend with it, you're still getting an effective cash back north of 3% pretty easily. Which,
how are you using that on auto insurance? Is it through the app?
Yeah, I went on the State Farm app this morning. They had billed me, for my next month's, because at least State Farm doesn't give you any discount to pay in full, which is frustrating. But I actually opted to pay the balance of the policy in full because you need to spend $4,500 in the first 90 days to get their $750 sign up bonus. So yeah. But all those programs, it's all very much your mileage may vary dependent on how you're going to structure your spending. I think we talked about it plenty.
Interesting. Yeah, I have Progressive. I believe Progressive on the car I drive.
Progressive gives you a huge discount to pay in full.
Yep. And then because I have two different vehicles, at least two different vehicles, I'm able to insure one of them. I have this Audi station wagon that I drive very rarely. I keep it in my garage typically, and I'm able to insure that as a collector car through Haggard. I'm able to pretty much tell them I'm not going to drive it very many miles a year, prove that I have insurance on another vehicle that resides here, and then because of
hard to hear you.
Yeah. Oh, sorry. I think I was covering my microphone. But yeah, essentially, I have a car I don't drive as often. I'm able to insure that through Haggerty. So if anyone has two different cars, that's a great idea because you're able to pretty much specify that one's not your daily driver. And because of that, they'll give you a better rate. So I pay very little on a no deductible policy for a car that I drive very rarely. So it's a nice little trick. It's a collector insurance. So it's a good way to go about it. Yeah, Rod, I see you pulling it up here. They're definitely a subsidiary of a bigger insurance conglomerate. I'm not sure which, but.
So you don't carry comp and collision, I assume, on the collector car?
I do actually. I have full coverage, no deductible on that one.
How much does that cost?
I don't know. I think it was cheaper. It was at one point, but then it got canceled because I was gone. I was in Asia, and they had mailed me a few notices telling me they needed to re-verify my main vehicle's insurance coverage, and because I wasn't here to get the letters, I could not verify it. So they canceled my policy, and then when I signed up for a new one, it was more. I think if you ever have your insurance forcibly canceled on you, that it'll raise your rates for the next time. So that was a bit frustrating. I think I was paying like $27 a month, and now I pay $30-something a month instead. So not so bad. But I tell them my annual mileage is like 1,000 or 2,000 miles, maybe think I might have it set at 3,000 or 4,000 max. I'm not sure, but it's a car I just putt around on the weekend. So it's a good idea if you ever have two vehicles. You don't drive one as often. Check that out.
Yeah, my premiums went up myself. But then again, I drive it a lot more than the 1 to 3,000 miles a year.
Yeah, I'm not sure if I ever need to do any sort of odometer check or anything like that, but I've only had it insured through them for a year or so.
How frequently do you shop around for your car insurance?
Not frequently. Not frequently. I do believe my rates are not so bad. Typically, when I call another insurance, they're just like, you know what, you should probably be honest with you, stick with what you've got. Motorcycle, I think I pay like $7 a month for insurance on the motorcycle. What's great with a motorcycle is you don't really need that much insurance because you hit somebody or you hit something, you're not causing that much damage. You're probably gonna mess your whole life up, but like you're not gonna mess their car up. Maybe a bumper at the most. So you can have pretty minimum coverage on a motorcycle. Like, I think mine's like $7 or $12 or something, very cheap. So that's nice, and that one's through Geico.
Insurance is definitely one of those things that they they love it when people don't shop around. They just want you to sit there and keep renewing.
Yeah, I've always shopped around. Every time I sign up for a new policy, I do. That's why like none of my vehicles are through the same insurer. I don't have, I think people might do that for the convenience of it, but it doesn't make any sense for me. It's just auto build, so why do I care who it's through?
Yeah, but do they not give you a discount when you bundle?
I've never noticed that. I've tried. I've thought that would make sense, right? But it never turns out to be that way. I have one of my vehicles registered to an LLC as well, and I kept getting quotes for when I was trying to insure it as a business vehicle, and that was even higher. I thought that would maybe be cheaper. It was like 2 times as much as insuring as a personal vehicle.
So what's up? Nothing else has happened in the market
No,
unless I,
nothing.
unless I already unless I already missed it.
Nothing's happening. That's why we're talking about auto insurance. No, yeah, we had a good discussion on this one hedge fund that's trying to use AI to beat the market, and we talked about the Powerball for a while. How the latest Powerball winner is only going to get like $1 billion jackpot is actually only going to get like 400 million pre-tax, and then talked a bit about
It's 1.4 now.
Yeah, it's in the we have it in the nest.
Yeah, but even if you win it, I know like what is it like? It's the number. It's like at least account for like 60% of it going away. Yeah, no, I'd be fine with that. I'm
Yeah.
not gonna complain.
Yeah, I think the person who bought it from the gas station scratched it off. I don't think they're going to complain too much. I saw that the really recent lottery winner that's spending a lot of money on luxury real estate, and talked about that for a bit. I'm gonna see if I can find the tweets on that.
Yeah, he spent he bought 3 properties. I think it was like 72 million.
Yeah.
Which I'm like, okay, dude, do you? But it's a little excessive.
Incredible.
What's more interesting is when you hear the stories. Is like whenever I get the little like pop-ups for it, are like the people who won the lottery and lost it all. Look where they are now. It's actually pretty wild how often and how many of them just completely fuck up their lives even worse than before they won.
Well, it's crazy because you'd have to imagine that there's like hospital chasers of money managers coming after these lottery winners, right? Like, you win the lottery, your name's out in the news, everyone's, publicized
Well,
your.
not everywhere, because certain states allow you to conceal your identity.
True, but you have to imagine that there's still people finding out, right? Why and then at that point, these money managers and people like that are gonna try to get you, right? Because
Yeah,
you're
well, you would
someone.
think, but the thing is, when you read these stories, it's not really them. It's actually friends and family that have like
Hmm.
come back and have like, hey, I'm your mother. You gotta give me some money because blah blah blah. It's like that kind of shit happens. There's one I read. It was like this guy won like 30 million or something, and his best friend um, wanted to get money from him to invest in like this company or this idea or whatever, and he like, gave him money, and there was like no progress reports or updates or anything like that. And then eventually he found out that his friend basically just like took the money and moved to Hawaii, and like just
Here's a data point.
never like contacted him
Whether
again.
they win 500 million or 1 million, about 70% of lotto winners lose or spend all that money in 5 years or less.
That's crazy.
There's a good case to be made then for them not to take the lump sum. Therefore, they are forced to wait the 30 years, and thus they cannot possibly spend it all in less than 5 years.
Well, Mark Cuban argued for that because he's like, people are so bad with their money. Like the people who play the lottery are the people who, I mean, for lack of better words, are the
Yeah,
have-nots,
we,
right?
we
So as
were
soon as
we
they
were talking
have,
about this
they go
before. We were
crazy.
basically saying,
Oh, sorry,
no,
I
it's
can
okay.
repeat
But
it
it was
then.
like, people are willing to commit $10 a week, whatever, toward their lottery habit, but those same people aren't willing to save, $10 a week in a Roth IRA and actually, save and build wealth over time. But
No, too slow. Too
Yeah,
slow.
I don't know if I totally agree with that. I did know one individual who won the lottery, and I think he won like 10 million, but he was not. He was well off to begin with. I was surprised he played so much, but
Actually, like one of my, I think the congressional district that I grew up in, the guy won the lotto and then he became a congressman. So sometimes you do well with that money, sometimes you don't. And
I
also,
guess
like,
that's your opinion on if he did well. It sounds to me like things got worse.
Yeah, well, I mean, it's apparently if you just become a state senator or something like that, you can get an annual salary of $200,000 and then die with, what's it, 69 million?
well, yeah. You just have to do hookers and blow every other night if you win the lottery, and invest the rest.
Realistically, I think if you did that strategy, you'd make out pretty good. You think about how poorly some people have done after the lottery. I think hookers and blow every other day, and every other dollar gets invested. You might just do all right.
I would still refuse to pay for one of these overpriced new automobiles, even if I won.
I didn't know where you're going with that, Rod. I really didn't know where you're going
I
to go
thought you
with
were going to
that.
say escort,
Uh,
Rod.
no,
Yeah,
I don't see why people spend money on that stuff either. But
I think like there was a couple good guides to like if you did win the lotto. Like I think I saw a bunch of posts on Reddit, like get a partner level lawyer that deals with this kind of stuff, and then they'll set up like trusts, which will make another trust and a trust. I have no idea. Like it was like a way to layer the paperwork essentially, just to make it a little bit harder to like find who you are or something like that. And then you know, it essentially like basically don't tell anybody. Like delete your phone, email, whatever, and then just get completely new ones, and then have like the lawyers handle everything, or like have them like hire an assistant. Like
I
it
guess we've
gets
run out of
pretty
things to
expensive.
talk about here.
So like, yeah, I guess that's what we're talking about a lot right now.
more likely, Monative probably couldn't hear you speaking, sick.
Oh wait, so you can't hear me right now?
That probably happened. That probably happens.
Did Monative get a wait?
Monative, can you hear Psych right now? He's giving a thumbs up.
Okay.
I don't know if that's, but yeah. I mean, it sounds like needing to go off the grid, delete everything,
I don't see
is
why anyone would want
more
that.
so
That sounds like a horrible
you're bad with money.
existence. I mean, that just
Because if you
why
think
would I
about a lot
want
of
to
people
blow
that
up
have
my
done
entire
well,
life just because I came into wealth. That just strikes me as horrible.
A lot of people in the retail investing world did very well on meme stocks or crypto back in 2021, and I don't think those are exactly the people that needed to delete everything and refuse to stay in touch with family and friends because they're gonna end up giving all their money away, right?
Wait, if going off the grid involves a 60-foot sailboat, I'll go off the grid.
But if you made the money in meme stocks, it has to be a 69-foot sailboat.
I'm still not calling it meme stock or AMC or anything. I'm naming it a proper name.
Shitco's?
Blue chips. I think he means blue chips.
I was looking at AMC earlier today just out of curiosity, like my loose thesis being that if the apes are in fact not leaving, then perhaps there's still money to be made, say, writing out of the money puts to monetize their disinterest in leaving. Like, I think it was the 42 day to expiry $7 strike on AMC was yielding around 7% or around 60% annualized. But I haven't opened any trades on that. But I keep thinking of stuff like that on these stocks that people refuse to let go down. Whether there's trades.
Well, I saw those people. You made one comment, I think, or maybe it was against space, and then you like everybody was coming at you like, what makes you think I'm an ape, and like what makes you think I've lost money, or like some shit like that. I forget exactly what it was.
Well, last week we got to talk about the death of Bed Bath and Beyond, and unfortunately, there's this fascinating subculture of people who believe their securities haven't been canceled, despite the filings to the contrary. So, yeah, very weird.
Wait, so I got a question about that. Like, how does the whole delisting thing work? Like, shouldn't is it going to be completely wiped off the map, or like how does it get deleted, or like how does something like this work for a bankrupt and delisted company?
Well, yeah, they have no claim on anything. In this case, the plan made it very clear they have no claim on any successor entity. Their shares are extinguished, canceled, whatever the phraseology was in this particular case. But yeah, as of the effective date, those the equity in the lost corporation was extinguished. So there's no claim on anything. They don't have anything.
So like, just out of sheer curiosity, like I'm kind of like looking through like what they're kind of posting or I'm trying to figure out like what the hell they're like trying to like talk about. But
they're confused and they think that the liquidating trust is something they have some claim on, which the equity holders in that case had no claim on.
Yeah, no, but I think the reason why there's a conspiracy theory is because like that the fact that they even have some numerical value, as in like, like how many shares that they bought originally, even though it's on the whole or whatever the hell it's delisted and untradeable or whatever in their own account. I think that's why like they think that something's going to happen, or like that the fact that something exists off this listed stock that like, oh, maybe there's a chance. Like
that sounds like a today problem. That sounds like a today problem.
Yeah.
Yeah, but I really want them to wake up. That's the thing. Like I have no idea why.
No, dude, that's a lost cause. Like that you're fighting against grain there. There's no point.
Kind of mentality of the MMTLP folks now. Just not wanting to recognize that their investment is gone and just hanging out on whatever tinfoil people post that'll confirm their their bias.
Yeah, but they just don't accept the reality of them losing, right? Like nobody wants to. Like, nobody wants to accept like, hey, I just lost like a shit ton of money, or even just lost in general. Like make it binary. People just don't want to accept that fact.
There's also a ton of people that became influencers to the crowd, and they don't want to give that up. They now have audiences of thousands of people that tune in to their YouTube videos, tune into their Twitter spaces and things like that, and talk about the stock with them. And to tell these people to let them all down is not going to happen. They're gonna keep the charade going for as long as they've got an audience.
Yeah, but it's also bullshit here. I mean, like, no offense. I mean, I've met some like
They also
awesome people
monetizing
here.
that, so they're
Yeah,
making money off this.
yeah, they don't care. But at the same time, if you're getting your information and relying, if you're relying on your information from people on TikTok, and I'm not gonna lie, like there's a large amount of individuals on Twitter that really don't back it up with anything. Yeah, maybe you're kind of playing with fire there.
I mean, like the other reason why I'm hoping that there's like a like something tangible where like like the accounts remove these dead stocks, so that way they know 100% for sure like they have nothing. Is because like I'm trying to wake somebody up right now from like this.
By the
I
way,
guess like
there was one more hack. 23andMe has lost millions of customer information. Same, this social masquerading kind of stuff. So this is out there, man. This is happening all the time, which gives me all the more reason to to stick to my cybersecurity stocks. I don't think that money, that budget is going away anytime.
I'm not sure if Monative can hear me, but yeah, like that's one of the other reasons why I never trusted the 23andMe. If someone can get your like DNA data or whatever too. So, what was it?
It is pretty creepy. We have a request to speak from Wishmaker. He looks to be a Bed
He's
Bath and Beyond
retweeted
ape.
PP show aplenty.
I see that. Do we let him
Who
speak
is one of the
for
worst
a
of the
moment?
grifters of this charade. It's
Absolutely.
really, ugh.
I'm thinking I'll let him speak. I have to have faith. He's gonna say something intelligent. We'll see. I will have my finger on the trigger to kick you off, Wishman. Wishmaker, feel free to share your thoughts. I'm sure they'll be on Bed Bath.
I just have a quick question.
All right, let's hear
Yep.
it.
So yeah, you are absolutely correct. It is about BBBYQ. It's not. I don't care which side you're on, or I don't give a shit about any of that. It's canceled, sure, whatever. At what point, say you hold a short position in BBBYQ, at what point do they allow you to close out for zero?
I don't need to close. The shares were canceled. So I'm no longer paying to
Yeah,
borrow.
so I believe when the shares are canceled, then they don't ask for them back because they're not even
Okay,
existing anymore.
so they credit your account with the they close out that position then, and you get your money, or you just sit
Well,
there.
when you short the stock, you got the cash. You just had
You already picked
liability,
up the
right?
cash, and
So
so
the
you got the
liability is
liability on the
gone.
books, and until they officially deem, like, say I could call and you know get my my tax losses, tax harvest, whatever the hell you call it.
Right, exactly. So
Then
the
officially,
effective date of the plan, the 29th, was the
yeah,
date that.
because I called and they won't let me, take this as a tax loss. So
I mean, it is a
that's
tax loss as of that date, right? Because
correct,
the
but I'm just
cancellation
waiting.
happened.
Oh, are you saying that you can't count that as a tax loss because you can't sell the stock, or
Yeah, the
that's
brokerage, there's no like tax information on this position. Like I, I was under the impression once this goes to zero, they cancel the stock and whatever, that you could get some kind of information about it, but
Yeah,
brokerages are not giving that
so
out
it's
for
a
some
it's a
reason.
worthless security. So that would be, the IRS has publications on that, so it would be the same process for any other, worthless security. But yeah, if you were long, you'd have a loss that you can utilize, and
Yeah,
for
so
short would have gain.
I'm currently, whether or not this matters, I'm speaking with, I don't consider him a friend, just someone on here who has a 70,000 share short position that he is trying to get out of, but he cannot. The liability is stuck and he can't get out.
Well, if his broker's charging him interest, he should definitely raise a fuss because the security's been canceled, and they should not be charging him any interest any further.
Yeah, I guess that was my only question because I just track a couple short positions and they're trying to get out and they cannot. So that's all I had. It had nothing to do with. I'm not trying to start a fuss. I know everyone here is like these fucking pumpers. I don't pump. I'm just your everyday blue collar worker. So I don't really care about the division
Well,
of
that's
it.
great. I
So
mean, look, we're all retail investors as well. Like, none of us wanted to see Bed Bath go the way it did. It's unfortunate, especially when a lot of people lost money. I mean, the market cap of it was what, near 100 million when it was canceled. So it's quite an extraordinary story that unfolded. And of course, like, always welcome to have everyone in our conversation, whether or not you're on bull side or bear side of a trade.
yep. Thanks for having me up, guys. Later.
Continue on that conversation. So, Rod or Joe, maybe you could like fill me in on this. I'm gonna tell my friend, since like I'm not sure whether or not he's able to sell whatever remains of his BBBY or whatever Q or whatever. But no matter what he does, he's still gonna get that on his like 1099, right? Is that what's gonna happen essentially? Or the tax form that when he gets it from the broker?
They should be, I'd imagine, but I'm not sure. I mean, it's such a weird circumstance. I don't think brokers have ever dealt with so many like retail traders holding on to a security that gets delisted. So it might not be like a part of their typical system. You may need to speak to an accountant. I don't know. It's weird. Maybe Rod, you know a little bit more than me.
Sorry, what was the question?
So like I got a friend that bought into the whole BBBYQ thing or whatever. He's like I since like it's been delisted or whatever the hell it is. I'm not sure whether he's or whether or not he's able to sell it.
No, there's
and then
no security
thereby
to sell. It's canceled.
okay. So since it's canceled, does it automatically come up on the tax form that it gets from the broker like next year, right?
I've
That I can just say,
personally
hey,
not
just put this up.
gone through that experience, so I couldn't tell you. I mean, but the broker should provide that on the 1099B or whatever.
Oof.
I mean, I'm looking at the Cornell Legal Information Institute. If any security, which is a capital asset, becomes wholly worthless at any time during the taxable year, the loss resulting therefrom may be deducted under Section 165A, but only as though it were a loss from a sale or exchange on the last day of the taxable year of a capital asset. So, I mean, it's going to be a loss in this taxable year for that individual. But I'm not going to give tax advice.
Got it. Yeah, and surprisingly, there's a large amount of like Koreans that are getting in that got into the whole meme stuff thing the last couple of years. It's super weird. But yeah, thanks for the info.
That's also why you actually, even though you believe something is a zero, you really don't have to short it to zero. you know, um, it's not gonna hurt you to just leave a little bit on the table before something happens. You know.
Yeah, there are definitely some shorts closing out the last few days of Bed Bath & Beyond trading. You saw some abnormal spikes, and considering retail is pretty much locked out from purchasing in that last week, it didn't seem like many brokers were allowing people to purchase.
No, there were plenty of threads I
crazy.
saw of people literally going out of their way to call up their broker and convince them that they were eligible to purchase the shares.
Yeah, but I don't think that was actually like much in mass. There's probably a few
Yeah.
Redditors, few people, not really much in mass. Those are probably the people with a few $100, a few $1,000 maybe at the most. But hey, I mean, it's something.
So I do want to correct
a bit
something though, because
historical.
I've seen this in a few
Interesting.
places, and I was incorrect in thinking that the shares for a security that becomes worthless, it was the date of cancellation from a couple sources I'm reading, it's actually the last day of the tax year. So I mean, if it's a long-term or short-term capital loss, doesn't really make much of a difference. But just to be more precise, it does seem like it's the last day of the tax year for the year in which a security becomes worthless, not the date that it's canceled.
So pretty much like December 31st is probably like the end of the craziness officially.
Oh, I mean, no, there's crazy people that still think they're going to get money from Sears. So these people can delude themselves for years if they want to, right? There's no really way to control that.
Yeah, but it's just super weird to me that like something even remains of Sears or even Blockbuster or like fragments of whatever shares it is on like the OTC market or something like that. Like I just never got that. It's like, why is there fragments of this?
The bigger question is, why does anybody care though? There's much bigger things to worry about and talk about.
Yeah, I think it's just that if people knew what these were or like why, I'm pretty sure like some of these conspiracy theories might have like not popped up or whatever the last 3 years. So just a thought, just a thought.
Well, hey, Chris, I'm just tuning in the last few minutes here.
Hey, how's it going?
Brought you up as here. How you doing?
I'm doing all right. How are you doing?
Pretty good, pretty good.
Nice. Yeah, sorry, I just noticed this space was going on, and yeah, I just wanted to add I think the options for BBBYQ they got like pushed forward in expiration to the 20th of October. So any options that were to expire after that date now would expire on the 20th of October this year.
Don't let the apes know that. They'll be trying to figure out how to purchase them.
It's all amazing things. I go on, well, I get flashed with like Reddit posts every now and then, and the amount of people who are, like, yeah, I lost $50,000 in an AMC, but at this point, you never know. It could come back. And I'm like, dude, I don't. What level of pain are you guys going to be consistently enduring because of this?
Anything to not buy the S&P, I guess. So what you got to find out is what's next. So people give up on it. What Rob was talking about earlier, puts on AMC. And I think there's been a lot of people that were interested in AMC at one point that have since been turned off by the CEO diluting the company so much. The extraordinary ape conversions was I don't think any company's really ever done that before. That was a unique way
Yeah,
to dilute everyone.
but then you have people on the flip side of that. It's like, guys, we need this dilution because then otherwise, the company's not going to survive. So like this is actually a good thing. And I'm like, all right, like what's that syndrome or whatever where you're like not like you like to fall in love with your captor or
Stockholm
something like
syndrome.
that.
Stockholm syndrome?
That, yeah, it's like, dude, really?
Yeah, I think it really does take stepping back for a week or two, not going on Reddit, not going on Twitter, at least not for those topics, and separating yourself from that hysteria, and then that's when you kind of start to gain clarity. You can't have that clarity when you're still invested, when you're still browsing the subreddits, when you're still indulging in that group thing. That's the worst part about Reddit. Like Reddit's got a lot of great content, but the big problem is that the way the upvote system works, when it comes to team activities, which retail investing seems to have become one. A lot of these meme traders believe it is. They're just going to upvote the positive news, downvote the bad news. So then what you're left with is only people, reaffirming your thesis, and that's pretty toxic. That's not a great way to look at stocks. You really got to see both sides of every trade. Back when I used to publish stories on GMEDD, we'd publish bull news and bear news. Granted, we've distanced ourselves from talking about only exclusively GameStop, which I think is for the better. I don't think you should ever focus everything on one stock. But it's very, very interesting to learn about retail investor communities through that experience.
Yeah, changing the subject for a second. Chris, how you liking that Build-A-Bear? I know you've asked me about it earlier in the summer.
Oh yeah, I haven't really been following it much these days, but yeah, that was a really nice write-up you did earlier.
No, yeah, because I know you were worried about the what would happen after earnings, but man, they're still going strong.
Yeah, look, I mean, if they can keep the results, I keep things going. Yeah.
Oh yeah, Build-A-Bear up quite a bit, 91% this past year.
Well, no, it's like it was last year, last September, I think, or like it was like end of August or beginning of September. I was like, this thing is unbelievably cheap for how much cash it generates, and so I should just buy the whole thing and just take it private then if it's not going to go up. And lo and behold, it went from like. I shared my thoughts at 16. It dipped to like 13 and change. I almost kind of peaked out at 30 in a year.
Yeah, this article here says up over 900% over the past 3 years. It's insane.
Well, that's different though, because they were pricing it. Like
Cutting out.
At the low or something like that.
Wait, did you do this write up like about a year ago? Like I see that it's from 1 year ago. It's about 90%. Is that Is that when you wrote it or?
Oh, what's the title of it? Maybe might be me.
Wait, no, yeah, I'm trying to figure out like what you guys are talking about right now. So like I'm looking at Build-A-Bear price right now. So I'm guessing you did like a DD or a thesis about like a year ago, which was when it was like $12.
Yeah, I mean, like I published it at like 16, and then it dipped a little bit, and then it just rocketed back up, and everyone realized that it wasn't going to go to shit.
Uh-huh.
For stuffed animals.
Hell yeah. I don't even know the last time I saw a Build-A-Bear, though. Because I don't find myself in malls very often.
Yeah, but they're not just in malls, actually. They've actually downsized their square footage in malls to be more standalone stores / vending machines / partnerships. They've de-risked from malls.
Yeah, I remember GameStop was doing that under Sherman as well. Bro, I remember that, looking at the strip malls versus the shopping malls. And I remember Andrew Left was making fun of shopping malls, saying that, way of the past. And, our research concluded that was not the case for GameStop. They were not as present in the shopping malls as they once were.
I mean, it's just a misunderstanding. The company never had a major presence in malls in the US, at least. The only time they disclosed a breakout was in Mike Mahler's brief leadership in 2018, and it was 90% of their US stores are strip based, but they haven't broken anything like that out since.
What do you think, Rod? Good time to wrap it? It's been 2 hours now, 2 hours, 5 minutes.
Yeah.
Can let everyone know the schedule for this upcoming week. So we've got the open mic on Wednesday at 7 p.m. Eastern. So that's hosted over on @GMEDD. And then, of course, come back next week, Friday, same time as always. Market close, 4 p.m. Eastern, 1 p.m. California. And tune in on this account for the Wook in Review. So set it up on your calendars. We've got a Discord reminders set up as well. So if you're on our Discord server, you can see the reminders there. You can join there by going into your browser, typing in wook.gg, join our Discord server, chat with about 7,000 other retail investors. It's great to have somebody come up today from the bear side of BBBY and seem like he's interested in learning more about the markets. Someone like that, great kind of person to join the Discord and see both sides of the trades. And I think it's great to have all different mindsets, all different experience levels chat in one environment. So definitely check that out. Tune into our open mic next week. Tune into the Wook in Review. And thanks everyone for listening in today.